Hey everyone, and welcome back to the third episode of the series Journey to Become a Millionaire. In today's episode, I want to clarify what this journey really means. For me, becoming a millionaire is not about having $1 million cash in bank account. It's about achieving a net worth of $1 million by building assets and making smart financial decisions. I'll also be diving deeper into the stock market, sharing the difference between an investor and a trader, and revealing the first stocks that I have invested. So let's get into it. Let's start with what I mean by hitting a 1 million milestone. Your net worth is simply the total value of everything you own, like investments, savings, property, minus everything you owe, like loans or credit card debt. It's about growing your assets and reducing liabilities at the same time. So do not let your paycheck pay for the things that you want, but pay for the things that you need, and let the assets pay for the things that you want. For me, this journey is about taking consistent steps to make money work for me while building long-term wealth. Now let's talk about the stock market. Some of you might be wondering if I'm planning to be an investor or a trader, so let me break this down. Traders focus on short-term market movements. They buy and sell frequently, aiming to make quick profits. It's like fast-paced game, but it requires a lot of skills, experience, and emotional discipline. Investors, on the other hand, take a long-term approach. They buy stocks and businesses they believe will grow over time, holding them for years and even decades. So I have decided to focus on investing rather than trading. Why? Because history has shown that stock market is a wealth building tool for patient investors. As Warren Buffett says, the stock market is a device that transfers money from impatient to patient. Now for the part you've been waiting for, my first investments. After doing some research and reading a couple of books on investment, I have decided to first invest in growth stocks. For my first investment, I picked these 3 blue chip stocks. Before buying shares for any company, there are key aspects we have to study: the value of the company, its growth, company's past performance, and future projects. Researching these components gives you valuable insight about the success of the company and gives you a green light if the company is worth investing for. Therefore, these 3 major companies satisfy all these requirements, and it was easy to pick them because who doesn't want to invest in these major, well-established, high-growth companies? However, it's not that simple that you just go on and pick a blue chip stock and invest right away. The goal is value investing, to buy shares at a reasonable price. Most of these blue chip stocks are overvalued, which means you are paying more than the actual worth of the company's share. This is why we try to find the intrinsic value, which is a true value of a company's stock. There is one way to find out the intrinsic value is through a discounted cash flow method, where you have to look at the free cash flow, growth rate, discount rate, and any shares outstanding by the company. The values are then plugged into this following formula to estimate the intrinsic value. I know it looks all complicated, but we will discuss this method in the upcoming video. So I calculated and estimated the intrinsic value of Amazon to be 198 per share, for Microsoft it was 415 per share, and for Google it was 185 per share. Then during investment, these stocks were trading below their intrinsic value. Therefore, it was the opportunity to invest in these stocks. Now after a few days, as you can see, currently they are now trading above their intrinsic value, which puts my investment in positive side with profits in hand, and the portfolio will continue to grow from capital appreciation. If you're thinking of starting your stock market journey, here are 3 simple steps to get going. Number 1, educate yourself. Read books, watch videos, and understand the basics of how the stock market works. Number 2, start small. You don't need thousands to get started. Even $50 or $100 a month can grow significantly over time. 3, the most important, be consistent. Don't let short-term market fluctuations scare you. Investing is a long-term game. This journey to becoming a millionaire is just getting started, and I'm so excited to share every step with you. Remember, this journey is not about getting rich quick. It's about building sustainable long-term wealth through smart choices. In the next video, I'll be talking about how to create a diversified portfolio and sharing the tips that I am currently reading from the books. Make sure to like this video, subscribe to my channel, and let me know in the comments what's your biggest question regarding the investment in the stock market. Let's grow together. Thanks for watching, and I'll see you in the next video.